is the BOE preparing the market for negative rates? Because we got some mixed messaging out of that commentary, don't you think?
Well, what they're trying to do is put it in the toolkit to make sure they've got it available. After all, there's no point saying that they can do it if they can't. So they need time to prepare. They need, for not just themselves, but also commercial banks. They need to make sure that they have got their systems in place to be able to deal with negative interest rates. And what they're saying is that they're not going to do anything for at least 6 months. Now, the first monetary policy meeting after 6 months' time is on the 5th of August. So they could potentially do something then. But do bear in mind that at that point, the Bank of England is assuming that GDP is expanding in the region of around about 5% per quarter. We're not that far off, according to the BOE's forecasts, as you mentioned, the point at which we get back to the level of GDP where it was in 2019 Q4. And inflation will be about 1.5%. So it doesn't strike me that that is the sort of backdrop against which they would cut interest rates further. So if the bank's right, and it's obviously a big if, then the conditions would be that they don't need to cut interest rates further.
Right, so you think that the likelihood that we will see negative interest rates is pretty low?
I think, well, it's difficult to say because obviously the progression of the virus is very tricky to understand. But I suspect that we'll be in some sort of remission at that point, and possibly a sort of something more permanent if the vaccines are proved to work against multiple variants, and we see the virus fully, maybe not put to bed, but certainly heading in the right direction. Then economies will start to expand as we see restrictions being lifted, and there will be no need to loosen monetary policy further at that point.